Hey everybody, my name is Kyla. Welcome to my channel where I talk about the stock market and the economy amongst other things. Today we're going to be talking about Jerome Powell. Jerome Powell gave a speech in which he directly talked about the labor market, which is pretty important for how we think about the economy moving forward. I'm going to talk about what he said, kind of push back against some of the things that he did say, and then talk about the outlook for how the Fed is thinking about things moving forward. So basically the Fed is going to slow down. They said, hey, we could slow down rate hikes as soon as December. You know, we've been doing 75 basis points for a while. We've been ripping rates for a bit. The reason that we're going to slow down is because things are pretty uncertain out there. We don't really know what's going on, so we figure we might as well not rip rates right into the face of uncertainty. It seems like 50 basis points of rate raising is expected for December. Jerome Powell highlighted in the speech too that goods inflation is slowing down. He highlighted that rents have been slowing down, but they're pretty worried about labor costs. They're worried about the services component of inflation. So you can think of inflation as broken out into goods, so how you buy food, how you buy clothes, apparel, and then services. So if you go and get healthcare, or if you go and get your hair cut. And the reason that they're worried about the cost of those services, it could create a lot of price pressure from how fast wages are increasing because they're worried that there are not enough people working. That's their big worry, is that services will end up driving inflation moving forward, and that'll be a little bit harder to control for. So the Fed sees this gap in the labor market, and Jerome Powell says it's primarily driven by pandemic era retirements. And if you look at labor force participation rates, which is the number of people working who can work, it has declined. He's saying that a lot of this is because of pandemic era retirements, lack of a good immigration policy, slow growth in the working age population. And the obvious solution to this would be increasing workforce participation, but the Fed can't do that. They have to do it the gross way. They have to do it the ugly way. They have to slow things down so people stop hiring as much. Because you have two solutions, right? You can make it so more people enter the workforce, or you can make the workforce kind of shrink. You can have less jobs available. There's a lot of things to say about this. So the whole premise is kind of not true. So Employ America has a report that debunks this. They talk about how there are labor shortages in particular areas like pilots, construction workers, but these are not shortages that are going to be resolved by bringing back older workers. As they say, it does not appear that there's a substantial labor supply issue in an aggregate sense. It's kind of in these pockets of the economy. So labor force participation rates have been trending downwards, but bringing the aging workforce back into jobs isn't really the solution. They're not going to maybe be able to be pilots or construction workers. The solution is probably going to be better immigration policy, better training, etc. But of course, the Fed can't do that. The Fed can't fix that. So the Fed has to do what the Fed does with their toolkit, which is just kind of slam a hammer into the economy, say, hey, slow it down. We can't really make this grow, so we're just going to make it stagnate. So the Fed is trying to reduce demand for workers. That's their solution. So Secretary Yellen came out and said something similar to inflation could come down without broad layoffs occurring across the economy if companies slow hiring by reducing the number of unfilled jobs they're trying to fill. So they're saying, hey, companies, stop hiring as much, and that is how we slow inflation. It's all about the labor market. And because the labor supply is unlikely to pick back up, we need to bring labor demand down. We have to put supply and demand back in balance somehow, and instead of increasing supply, we're going to reduce demand. But the labor market is already slowing down. Labor supply is already slowing down. Quits rates are actually a pretty good thing to look at if you're looking at how the labor market is performing. Employ America, again, has done a lot of really great work on this. Data came out today on the jobs market. US job openings fell in October, and the quits rate fell too. So the number of people quitting their job has fallen, and that means that the labor market is essentially slowing down. We're seeing job openings slow down, but we're also seeing the number of people quitting, leaving their jobs slowing down too. There's a lag in policy and layoff announcements too. So we're going to see more and more jobs begin to slow down as well. This is sort of a predecessor for what is to come, and we're already seeing this slowdown in the labor market happening, even though the Fed is like, hey, the labor market needs to slow down. The slowdown is already here. Everything is slowing down too. It's not just the labor market. We can look at housing, manufacturing. All of that has slowed down. You can look at the Dallas Fed manufacturing survey. Those guys are saying like, whoa, Fed, you got to slow your roll. It's getting bad out here. The housing market is a huge driver of inflation too. Fed actually had a paper on this. They said in the paper, spiked home prices contributed about 40% of non-shelter CPI between February 2020 and February 2022. Home prices, 40% of CPI. Of course, the Fed looks at PCE, but all this trickles back, right? And the Fannie Mae is saying, hey, home prices are going to slow down, potentially going to fall 1.5% in 2023, then fall another 1.4% in 2024. So we're seeing slowing across the board here. We're seeing slowing in the labor market. We're seeing slowing in the housing market, which is big driver inflation. inflation. Also, housing is really tied into the labor market too. You know, if people are feeling good about their jobs, they're going to go buy a house. If they're feeling bad about their jobs, they're probably not going to buy a house, right? So everything is interconnected. There's a tweet that talks about how many brilliant, talented people long to work on projects for the betterment of humanity, but instead are optimizing tracking pixels because they want to buy a house in the Bay Area one day. So not only are home prices contributing to inflation, but they're also contributing to a lack of innovation. I think that's an important thread to pull on. I'm not going to pull on it right now, but I think that it's just important to talk about how Powell sees the market. He says the labor market it's too hot still, even though we're seeing these pockets of cooling. And in the Fed meeting minutes that were released last week, they said that a recession was their baseline scenario. Jerome Powell said today that a soft landing for the economy is very plausible, still achievable, but he says that the path to that outcome has been narrowing. The Fed wants to keep on going. So they're already kind of like, okay, things are getting kind of crazy. But the Fed is like, hey, we're going to hold policy at a restrictive level for some time, and we're going to keep on going. We're going to keep on going. Even though everything is already slowing, we're going to keep on going. And so the question is, everything is already slowing. Is the Fed risking going too hard to make up for going too slow over the past couple of years? I think they're risking a little bit of an overcorrection just because we are starting to see a slowing in the labor market. And if the Fed pushes hard enough on the labor market where people end up losing their jobs instead of companies just slowing hiring, that's when things really get concerning. So Jerome Powell sees more to do, but I think the economy is saying, hey, buddy, it's already happening. Okay, I'll be back sometime this week. Thanks so much for hanging out. Thanks so much for spending time with me. The notes for this will be attached in the description box below if you want to go read. But yeah, hope you all are doing okay out there, and I'll talk to you all soon.